Yeah, I think Hong Kong would be a better play than the mainland equities. I mean, obviously, Hong Kong has been sold down very aggressively this year, especially in the past 2 months, and now it's starting to bounce back. But even so, after this bounce, a very strong bounce, Hong Kong is still like trading at 0.8 times price to book. We haven't seen this sort of valuation level for years and years. So I think if next year a recovery can continue, and also we have some help from the policy, and Hong Kong, as Emily mentioned just now, is reopening as well. We're dropping all the social distancing measure, so tourists are going to come back to Hong Kong, so et cetera, et cetera. So I would say that Hong Kong is actually a better position for a recovery for investors than the Chinese A shares.
Now, when we look at the removal of zero COVID, we're expecting and seeing a spike in COVID cases in Hong Kong. We're at about 20,000 a day.
Yeah.
In China, they're having large numbers as well. So what is this going to be doing to the recovery story, to the supply chains, and how do you think it's going to be impacting decisions over at the FOMC?
Yeah, I think the disruption for supply chain in the next 2-3 months is going to continue. So I think for the international experience, for example, the Delta wave that we saw in 2021, it lasts for 6 to 8 weeks. You see a huge surge of COVID cases. So then as people get sick, they can consume, they can produce. So it would be a disruption for the global supply chain. So then you will see, because of the Chinese exports getting more expensive, right? So it's getting more expensive to ship out. Then inflation is pressure in the U.S. is going to remain elevated for some time. And so, even though the market was hoping the FOMC can sort of pivot as soon as possible, right, because the U.S. economy is slowing down, but inflation pressure persists, and that would make FOMC sort of hesitant to pivot.